Well, we do see stocks opening fractionally higher to round out the week. We have seen records after records this week, despite a government shutdown, and of course, a Fed decision on the horizon at the end of the month. And joining me now in studio with more is Ben Evans. He's founder and CIO at FedWatch Advisors. Ben, it's great to see you this morning.
Good morning, Kirsten.
Yeah, look, we see stocks remaining resilient despite this shutdown. What do you make of this market?
Yeah, it is toppy, so to speak, right? Meaning we got a big run and there was all this AI news driving it, which is actually interesting because it didn't, for once, the Fed was not driving this market rally because it's been all about rate cuts over the summer and switched to this AI drive. But I do think we're kind of like in a trepidation phase because we're in the 10th day of the shutdown. We're getting some tension within the GOP about the CPI data being released because of senior citizens.
Yeah.
You know, maybe this leads to the government reopening quickly. Because if it isn't, I think it will start affecting the economy a bit and it will test the market's patience.
Yeah.
Because it ultimately shouldn't really affect the economy materially. It has never done that so, but if you extend or prolong the shutdown, then it can, or at least the market will discount it as such. And then we're getting at the end of the month a lot of things coming together. Right? Not just the FOMC meeting or the CPI report being released, but also President Trump meeting President Xi, and we get the Supreme Court ruling on the reciprocal tariff. So there's a lot ahead of us while we're sitting here at record highs.
Yeah.
So I think it's a bit of a sideways choppy action for the moment.
What does it mean to you that we aren't getting the usual economic dip that we do get during the shutdown ahead of that Fed decision at the end of the month?
So one, we do get global data, which we can react to. There's PMI data out and there's other CPI data out. So that does drive market action, I think. The fact that we don't have all the data, yes, we know that we rely somewhat more private estimates. They don't seem to affect market sentiment as much as expected because the government data is more robust, but we do need it at some point. And as the Fed already said, several of the Fed said this, if it gets delayed too long, it becomes problematic. We can't really make good decisions, and that will reflect itself back into market expectations too, of not knowing if we can actually price in the next rate cut, yes or no. That will cause uncertainty. So we definitely are at a cusp of like, this goes on, then the uncertainty will become higher, I think.
What more can you share about the health of the economy from your perspective?
Well, it's strong. I mean, there's no question that the AI spending and the investment that follows through it is happening. There's definitely a lot of liquidity out there, and that's what the markets are saying. And although confidence is down, and the shutdown is certainly not helping that, spending is robust. That is not really slowed down. The earnings season started already strong with Delta Airlines yesterday. Really interesting to see that business travel and luxury travel has really picked up.
Yeah.
Cruise lines are up majorly, so there's spending happening. So it indicates a good economy, but mirrored by uncertainty. So at some point it does get affected by that, I think.
Interesting. So in terms of where we go from here, we could see some uncertainty ahead. What kind of seasonalities might be at play that our viewers should know about?
So October is always a bad month, right? It's like this volatility month, and it's like taking a dive in a cold bath, that's a feeling, but it could completely play out differently. I mean, so far the way the market is traded, the shutdown is a little bit sell-off and then it just rallies with this view of like, well, uncertainty begets uncertainty, but also drives people to stocks, I guess, to seek safety, or gold if we're seeing with safety. So that's, I think, the market sentiment, but takes out the whole seasonality pattern sometimes of a volatile October. It's not as volatile, so I think it doesn't play too much of a role currently. But we have to, I think at the end of the month, more things come together. So the VIX has futures, and in the VIX, what they call futures curve, you see this steeper slope, and that does indicate, I think, a rising volatility prospect that we could expect.
Earnings season is upon us. Basically, we saw Delta Airlines report and address the shutdown. Doesn't see any notable impact now. NYSE listed said, much as you're saying, Ben, a prolonged shutdown could potentially have an impact if we see it drag on another 10 days or so. We're going to hear from some of these banks, and we know that rates obviously impact their business. Any groundwork that you can lay there for when big money center banks start reporting, even some of these regionals in the next week or so?
Yeah, I think those are the main key focus near term, particularly the big banks. You know, the story that's out there now with Tricolor and with First Brands that all tied into banks and regional banks, it's kind of a story to watch because it could impact individual banks' earnings potentially, or something of that comes to the surface. On the other hand, it's also about business lending and about deregulation. To what extent is the administration efforts already showing up in those metrics? So, and we have record credit card balances, right? So I think the banks are in good shape, good capital base, and not much of any type of distress playing, but the banks are also levered. And in levered environments, meaning like you borrow more than that you have as capital, that can sometimes be a bit of a challenge too. So let's see how that plays out. But I do think this earnings season is likely to be strong. May again surprise to the upside given what the economy is showing. The top line of the economy shows real strength. That gets reflected in earnings.
Ben Emmons, founder and CIO at FedWatch Advisors, joining me here in the studio at the Stock Exchange. Ben, thank you.
Thank you.